Hello everyone. How are you? Coming to you live from Amsterdam today. And man, Amsterdam is a fun city. Let me know if you've ever been to Amsterdam. It's such a fun city. All right, before we get started here with our trading show and talking about what is important to know as a trader, we'll get a market update. We look at what is different from saving, investing, and trading. I briefly wanted to show you this. So yesterday we went to a place called Wonder World Experience. And as you can see, Andrea and I got immersed into SpongeBob world. Pretty fun. This is what we do day in and day out because we live a crypto lifestyle. It's just so fun traveling and doing all the fun things. I recommend you follow me on social media. You see my handle there, Shankar Poncelet. You can also follow Andrea. And then you always have a peek behind the scenes of what it means to be living the crypto lifestyle. How does that sound? Good? Okay, great. Well, what I want to do in today's show is 3 elements. Number 1, I want to look at the current market situation with you because, as you know, the way Bitcoin goes, the way the market goes. Number 2, I want to briefly tell you about the 3 different types you can be involved in crypto. And then today we're actually going to focus on the final type, which is being a trader. I cannot show you, of course, how to be a trader in a short video, but I asked artificial intelligence, what do you think I should talk about? What do you think a trader needs to know? And it gave me a list of great information, and we're going to go over that list. But we will also do something very fun. We will place a trade on a demo account. We'll do that together. All right, so here's someone pretty amazed at doing this. That was probably a SpongeBob fan. That's my guess. All right, so let's look at the current market situation. You know, we are currently looking at Bitcoin just being married to the $96,000, $97,000 level. And we're just waiting for Bitcoin to make up its mind. Do you want to go up? Do you want to go down? Obviously, when it goes up, we have very likely the next phase of the bull run that we can enjoy. When it goes down, I personally think it's just yet another pit stop that shakes people out, that makes people doubt that crypto is here to stay and can help us succeed. But as always, you need to get used to look at those charts, which is why we do that almost daily together. So what we're looking at here is the market cap Bitcoin dominance. And really what we want for our alternative coins to really rally, we want Bitcoin dominance to go down. So you can see here, this was the big scare with the trade wars and DeepSeek. People sought safety in Bitcoin, but now it looks like slowly but surely Bitcoin dominance goes down, and there is a trend line here to pierce through. But once we make this happen, then the altcoins will also rally. And why are we as traders interested in that? Well, the altcoins make bigger moves, proportionally speaking, and that means that we can make more money in a shorter amount of time as traders. Now, when the Bitcoin dominance goes down, that doesn't necessarily mean that Bitcoin itself goes down too. Because what we really want is we want Bitcoin to go up. Okay, so here we have our Bitcoin chart. And this is the trading range that Bitcoin has been sitting in for quite a while, bouncing up and down between 92,000 and 108,000. And we have this interesting situation here where we have if I zoom in on this, it gives reason for hope a little bit. First of all, Bitcoin has not fully gone down to the base of this triangle. And actually, if this triangle is a structure that the price movement observes, you can see that it actually ever so slightly broke out. And it's doing the pit stop situation now. This is something that you have to get used in crypto. It first goes the way you want it to go, and then it changes direction to then make up its mind and finally go the way you want it to go. Okay. Now, I will say though, I am slightly optimistic, but it could go either way really. And to really be sure that we are going into the next phase of the bull run, what you need to do is you need to zoom out a little bit to get a higher level view. And you need to recognize, okay, so really we have this trading channel. Something that first needs to be reclaimed, of course, is the mid-range, okay? But ultimately we need to break through this, this all-time high level. But I will say, I think psychologically speaking, if we manage to pierce through the mid-range, then people, psychology, the markets will get so happy that we'll be ready for the next leg up. If for whatever reason we can't make that happen, well, then we will first retest this lower boundary and see if we can then do something like this. Or this is also a possibility, right? Going down, test the levels of 82,000, something along that line. In crypto, you have to always know what are the options, because the whole trading game is a play with possibilities, knowing what are the possibilities and the probabilities, and then managing your risk. So this is it for the market update. Again, we're just waiting. We have a little bit of hope because it does look like when we zoom in here, we zoom back in, it does look like Bitcoin wants to break out of this structure here, this triangle structure that it was building. And now it's is in the pit stop situation. And what we hopefully can all hope for is that next week we're going to reclaim the magic $100,000 boundary. Awesome. What I need you to do now is hit that like button, because I want more people to expose to this, especially because today we're going to actually place a trade together. You and I are going to place a trade together. I'm going to show you how to do that in one of my accounts. But for that to be possible, I need you to like, I need you to share, and I need you to subscribe. Of course, that is how you can support me. I promised you we would look at the 3 different ways you can be exposed to crypto. Number 1, be a saver. Number 1, be an investor. And number 2, be a trader. Today is the video about traders, although I will briefly tell you what the other 2 are. If you don't know yet what risk profile you likely belong to, I highly recommend you go to mycryptoalliance.com, mycryptoalliance.com. We have a quiz there. You take the quiz and then you get your results. You know, that's just that. It's just knowing what is possible. let's get started with the next phase of the show, and that is learning about the different risk profiles. Had that running loop there. Okay, so for most of you, you should most likely be a saver. A saver utilizes the method of dollar cost averaging. Every day, no matter what happens, you purchase a little bit of crypto. Andrea and I, we were at a great restaurant here in Amsterdam 2 days ago. The place was called Euro Pizza Restaurant. Absolutely great restaurant. Who would have thought that there's so many good pizza places in Amsterdam? The waitress, I believe her name was Lana. Lana said, I know about Bitcoin, but I don't know how to purchase it. I'm not so sure. And I told Lana the following. I told Lana, go to the website crypto.lifestyle, crypto.lifestyle. Enter in your information, and in return, you'll get an email with a video that breaks it down how to be a saver with Bitcoin in a beginner-friendly way. And you can do that too, by the way. So that's the saver. Then we have the investor. The investor looks at the markets about every other week or weekly, depending on how much time he or she has. And then she decides, is it time for me to be in one of the alternative coins? Because proportionally speaking, they might move a little faster than Bitcoin. Or should I be in Bitcoin right now? Or maybe should I be in stable coins? So the investor does time the market based on making educated decisions, but the amount of time he or she needs to sit behind the computer is still pretty limited. And if he or she is part of a community like mine, which you can by joining with one of the links, then they can just watch a market summary at the end of the week and know where to go. It's like having a weather forecast for the weekend, and you somewhat know what to pack and what to prepare for. Finally, and this is what we'll talk about now, we're going to talk about the possibility of you becoming a full-time trader. Something that I have embraced at the beginning of this year. I decided I will focus all my energies on two things. Number one, create the Apple reactions here. Number one, being an educator and being an advocate for the crypto space. And number two is being a trader myself. So spending all my time trading and making money. And it's honestly an amazing lifestyle. As we speak, let me see if I can show you an open trade. Yeah, I think I can. All right, so let me show you that briefly. As we speak, I have two trades open that I placed yesterday. So you can see I have 4 trades open, but 2 trades are in profit. I opened these trades yesterday, and now I'm already in making profit with it. Now I could close those trades if I wanted. I won't. But this is something where you have to ask yourself, in what other industry, or with what other profession can you just travel the world, do all the fun stuff that I'm doing, and trade and make money? It's very hard to find. It's very hard to find. But I will warn you, it's not necessarily easy. Most of you should probably be savers or investors. What it requires to be a trader is most and foremost time, experience, and lots of resilience. And as I told you, I asked AI, what do you think my people should know? and it gave me this. So we're going to look over this together here in a moment. Don't forget, you can take your risk assessment quiz. Go to mycryptoalliance.com and take your risk assessment quiz, so you know what is most likely the best part for me, being a saver, being an investor, or being a trader. Let's get to the next part of the show. Here you see the happy people, happy trading, we're making money. Awesome. Fantastic. We bring up the list again. Let's not underestimate AI. AI is very, very smart, and we largely underutilize it. For example, you could have AI help you with going through what you need to be covering in a video for traders. This is what I got. So rather than taking the time to make it all nice and cute, we dive right into it. I think that is really what matters most for you all. So you decided to become a trader, or at least consider starting your journey as a trader. And what I aim to do with this video is I want you to have a very high level overview of all the different subjects that you need to master, all the different components of what it takes to be a trader. And there is so much, which is why it is so time intensive. First of all, you have to know that there is a different mindset that you need to have if you are a saver versus investor versus a trader. Because really what investors do, they accumulate over time, meaning they make sure that over time they have as much Bitcoin as possible. That is really what matters to them. And they temporarily ride alternative coins such as Solana, Sui, or maybe more exotic coins. They take those investments to ride the upwave to then really accumulate as much Bitcoin as possible. Because the investor knows it is inevitable that Bitcoin at some time, most likely in the early 2030s, will reach $1 million worth of value. So to them, that is an amazing investment. They also understand, because I teach them how to, they can use their Bitcoin as collateral to borrow against it. And then with the money that they borrow, they reinvest, or they invest in themselves, or they do something to grow those funds. And then they have what we call an infinite money loop. That, of course, sounds a little bit easier than it is. But the truth is that you can use your Bitcoin to borrow against it. And when you make a loan, you don't have tax to pay. And then you basically take care after yourself for now and the rest of the future. And that is, by the way, what I'm doing as well. It's a very powerful strategy. But we're talking, you decided to be a trader. So let's see what it takes. Traders need a lot of discipline, emotional control, and a clear system. This is so very true, because there are very few things that are more emotionally triggering than having a position open, such as the one I showed you earlier. Now that those positions are in profit, but it's very well possible that in half an hour, all of them are actually, I got to show you this because this is unfolding here in real time. I think you remember that when I showed you my positions just a few minutes ago, the two bottom ones were negative, right? They were red. See, now everything is green. Okay, now the fourth one is breaking even. But this is like a slight uptrend in the market, and it may last for only a few minutes. It's very well possible that in 15 minutes, all of that is red, right? So I need to have the discipline to stay in that trade for as long as it takes where I think now is a good moment to take profit. And that is not easy, because on one hand, if you take profit too early, you might miss out on a huge gain. On the other hand, if you wait too long, you might not make profit at all, because it takes you into the red or below your liquidity levels. So that is why it is so difficult to remain emotionally balanced in trading. You need a lot of experience, you need a community to rely on, and also you need systems. You need to learn what different trading systems are there, so that you can always be confident in doing the right thing. Okay, showing you one more time, because within the few last seconds that I spoke, all of the positions started rising. And I personally find this absolutely fascinating. I love it. There's nothing else that I have done so far in my professional career that has given me more satisfaction. This is so cool and so powerful. But as I said, it's not easy, and you need to be guided in the right way. By the way, if you're looking for the chance to start this journey with someone, maybe with me, then you know what to do. Go to mycryptoalliance.com, take the risk assessment profile, and then at least you are at a starting point. It doesn't mean you need to start today, but you are at a starting point where you are connected to someone who's actually walking the talk, and not just and showing you proof here live. Andrea says, I love it, but yes, you need discipline and the ability to not easily get your feelings hurt. Don't take it personal. Absolutely. It is so hard to keep that rule in mind, because it is a rough field. I don't know if you looked at the news at all. There was a coin Libra that was launched yesterday, I believe, or the day before yesterday. And it was supposed to be Argentina's next national meme coin. And I believe the president has trusted the wrong people. And now what happened was a pump and dump, right? So in traditional finance, this would lead to lots of legal problems, but crypto is still vastly under-regulated. And we like that as traders, because a trader doesn't get emotionally involved in a coin. A trader sees a coin, jumps in and jumps out, hopefully at a profit. Now let's move on here. There's different trading strategies for different market conditions. So what does that mean? Well, we have scalping versus swing trading versus day trading. And really, this video is not there to teach you the 3 different modes of trading, but I will briefly tell you. Scalping is something that can happen sometimes within seconds to minutes. So what does that mean? It means you look at a chart, you see, oh, I think within the next 5 minutes, the coin value will grow. So I'm taking a nicely sized position, and I will ride up the wave during the next 5 minutes, and then I will sell. I actually like to do that. It is high risk, but I have a lot of fun doing it, because the way I sometimes see it, for example, we are right now in Amsterdam, right? So you see the river here behind me. You see the boats driving there. And this afternoon, since there's such beautiful weather here in Amsterdam, this afternoon, Andrea and we will go to do something fun, because Andrea demands it. Okay? No, I enjoy that too. So we're going to take advantage of the good weather. We're going to go out and spend some money. Go to a museum, have some good food, and so on and so forth. So what I like to do is I like to, in the morning, scalp trade the money that I need for the rest of the day to have fun. How does that sound? Well, and if we look at my current positions, I could actually exit now and have that happen. Look, if you look here, my open trades right now have a profit of $235. I opened them very recently, so I could just close all of them. Do you think $235 is enough to have a nice lunch and pay for maybe a museum? Yeah, I think so, right? So, and I like to do these things. Yes, obviously it is possible that cutting the position that early would have me miss out on a way bigger move up, but I'm okay with that. And that is where the strategies come in place. You want to have, as a trader, you want to have 3 different accounts. One for scalping, which is what I've just explained to you. You hop in and out of trades within seconds and minutes. And then one for swing trading, which is where you swing with the big trends, bigger trends, higher time frames. So let's say, for example, you have a feeling that Bitcoin is breaking out, and you know by looking at the charts that typically once it goes into a breakout phase, it stays so at current situations for about 2 weeks. So you understand that, you take a coin that you like, that you know is very reflexive to Bitcoin. For example, Ripple would be one, to my knowledge, or Doge. Doge is very reflexive to Bitcoin as well. You buy Doge, you wait the 2 weeks. When you see the first signs of the trend to reverse, you jump out. So several days. Swing trading is something you stay in for several days. So I have a different account for my swing trades, different from the scalping. Then the last that is mentioned here is day trading. So day trading can actually be a mix of scalping and swing trading, but you have one rule, and that rule says at the end of the day, no matter what, I'm closing my trades. And that really helps you to sleep better. Because if you have large trades open and you don't know what you're doing, you could wake up and all your money lost, which is why you need to learn from someone who's actually living it day in and day out. And that is what I offer to you. I have another landing page which I want you to take a look at, crypto.lifestyle. Yes, you can type that into your browser. And then what it will do is it'll send you an automatic video that teaches you how to dollar cost average into Bitcoin, even on a beginner-friendly level. So go ahead and check that out. Next, in trading, if you ever said in the past, I don't like mathematics, well then, I don't know if you're going to be a good trader, because at least you have to get used to looking at charts and indicators, and those indicators will guide your investment decisions. And they all rely on mathematical formulas. Okay, so you don't have to do the math. Well, of course, you have to do very basic math, but you don't have to calculate all of those indicators. They are integrated in those trading platforms, such as the one I'm showing to use my charts. TradingView is the market leader, I would say, and they have hundreds and thousands of indicators. You go and select them, and then you trade accordingly. One of the indicators that is quite a funny one is called the moon phases. Would you believe that very often when you look at the price of Bitcoin, depending on what moon phase we are in, it goes up or down, because people are influenced, their mood is influenced by the moon. Would you believe? And also, would you want me to prove that to you right now, going on TradingView and bringing up the chart, overlaying the moon phases? Would you want me to do that? Type in moon in the chat. Type in moon in the chat, so I know you want to see that. Type in moon in the chat. Andrea says, I believe it. The moon brings cycles. Absolutely. Okay, because Andrea saved all of you. Because of Andrea's interaction in the chat, you're gonna see that now. I'm gonna open this up for you. We'll see the moon. Oh, there we go. Alexander Vilchen, he says, yes, show me the moon on the moon phases on the chart. So let's do that. Okay, so this is the Bitcoin chart. Make it bigger for you. And first, what we need to do is we need to zoom out a little bit so that we can get a larger time frame. And now here I click indicators. And then I type in moon. And see, is interesting. It's under technical indicators. Actually, let me favorite this. And then I'd click it, and then the moon phases are overlaid. So do you agree with me? Do you agree with me when we look at this chart? Now, this is not 100% accurate, but do you agree with me that it is surprisingly accurate that when we have the blue moon, which we call the bull moon, the price goes up, and we have the white symbol here, which we call the bear moon, the price chops sideways or goes down. Again, it is not 100% accurate, but I believe if you traded Bitcoin with only the moon phases, I think you would actually end up making more money than a lot of traders. How funny is that? Are you surprised? Are you surprised? I'm interested. Are you surprised? Yeah, see, so this is one of the indicators. Of course, this was not a mathematical indicator, but this was one of the indicators that you can use to guide your trading. And that is what you need to get used to. And what you want to do is actually you want to have a confluence of indicators. What I recommend is whenever you open a trade, you have 3 to 4 of your favorite indicators, and you make sure that they overlap in giving you a signal to buy or sell or hold, whatever it is that you want to do. This differentiates you from someone who's just gambling, because then you might as well go to the casino and just place your money on a number. But by understanding these indicators, by understanding the macroeconomic situation and combining those things, combined with good risk management, you end up making more money than you lose. Hence, you are a professional trader and you can live off of your trading profits. So here we have some of those indicators. So moving averages, those are very, very basic but powerful indicators. And typically we look at how has the coin price evolved over the past 200 days, 100 days, 50 days, 21 days. Each trader will have their preferences. And then, of course, the shorter the time frame is, the more reflexive and short-term the indication is. So there's lots of different strategies you can use. People often talk about the golden cross, which happens when a shorter time frame crosses a longer time frame. That, of course, means something, right? So all of that you need to learn. The RSIs are important oscillator metric, relative strength index. It typically shows you when are either the bulls or the bears getting exhausted. Okay, so when the bears are getting exhausted, then it's time for the bulls to step in. Let me show you, actually, there's a pretty interesting RSI on the weekly Bitcoin chart right now. And that would indicate that we have a high likelihood that the bulls take over right now. At any point, we're waiting, right? We're bullish. We're bullish. Bring up my trading view again for you. And then, so how do you bring that RSI on? Well, you guessed it right. Let me get rid of the banner here for a moment. You guessed it right. You come to indicators, and then you use the stock RSI or the relative strength index. There are slight differences between both, but I'm going to use the normal RSI right now, and then see it puts this additional indicator on the map for you. And I told you, let me remove this one. I told you when we go to the weekly view, you actually see that the RSI is pretty high right now. Okay, so that tells you something. That tells you something. There's one, maybe it is the stock RSI. Yeah. So essentially, the simple RSI tells you, ooh, there's like lots of price movement and it's getting to the upper bound. And the stock RSI tells you there's like exhaustion in the price going down. So the bears are getting exhausted. And this doesn't happen very often on the weekly chart. When the bears are getting exhausted on the weekly chart, it often means that there's another move up in the cards. Okay, so what you want to do here, let me remove the moon phases here for a moment. What you want to do here is when you look at these indicators, you want to look at a very high time frame and then analyze what was going on with these indicators before these moves up. Okay, because this is what, of course, you want. You want to ride up the wave here. You want to ride up the wave here. And I want you to see that the stock RSI on the weekly chart was under 10%, bears exhausted, and then the bulls step in and we get this amazing up movement. Here as well, RSI down and up movement. So I'm hoping, and a lot of us in the crypto space hope, that we are in that situation again. RSI, see here, it was kind of true too. We were down with the stock RSI, and then we had this up movement. Now we are chopping sideways, and we are ready any day, maybe a week or two, to hopefully go back up. Hopefully go back up. This is not guaranteed, but this is just one of the other indicators that you can use to make your decision. How are we liking it so far? Let me know in the chat whether you find this interesting or not. This is for you who want to be a trader. So RSA, we have the market cap, the dominance, we have volume, we have order flow and market structure. So all of these are key technical indicators that you need to learn about. Then, of course, risk management and position sizing is very important. You need to know with each trade, what are you willing to risk? What are you willing to lose? And if you know what's the maximum that you're willing to lose, well, then you can put your stop loss accordingly. And that's very important for a professional trader, so that you don't wake up and your entire account balance is gone. Okay, Baru, he likes it. Thank you, Baru. Thank you. So how to calculate position size and use leverage effectively. So for those of you who didn't know, and this is for you advanced traders only, okay, you can use leverage. What does that mean? Well, when you upload your money to one of those trading platforms, they let you basically amplify your buying power by the factor of crazy, sometimes 100, 200, depending on which platform you are in. Now, why would you do that? Well, if you, quote unquote, only have $10,000 to work with, by only using leverage of 10x, you can work with a position size of $100,000. And what that does for you is it lets you make or lose money faster. Because if you look, for example, at a chart and you have $1,000 to work with, then 10% of $1,000, that would give you $100 profit. So imagine you buy a position, it grows by 10%, you sell, you have $100 profit. Now, with the very same account and the very same money, so you didn't have to own more money to work with, you can apply a 10x leverage. And then that same trade, instead of giving you $100 return, gives you $1,000 return. And it is not uncommon in the world of crypto to have a move of 10% in a day in alternative coins. Not uncommon at all. Even Bitcoin sometimes does that. And that is very powerful, because that now means that if you know what you're doing, you can make $1,000 every day with a trading capital of $10,000. Now, a word of warning: as easily as you can make the money, you can also lose it, right? So the $10,000 can quickly turn into nothing if you don't know what you're doing with leverage. I just need you to know about it. But I personally haven't touched leverage until years into my trading journey. What you can do and should do first is trading spot. Spot is what we call when you just buy and sell the actual coin. Because leverage, you can only trade on what is called a future or a perpetual. So that is not really the coin, that is a derivative of the coin, right? So it's advanced, but trading is advanced. Hi, all about money, honey. Yes, it's all about money, because I personally believe that money does lead to happiness, right? So yes, it is all about money. It's all about money. Then what else do you need to know as a trader? You need to understand liquidity zones, stop hunts, and market behavior. So liquidity zones is you have certain tools that you can look at that show you where are those liquidity zones, where are those orders just sitting and waiting to be hit. So for example, if you have a large order sitting at a level above you, well, then you know that once that level is achieved, that limit order kicks in and even more of the coin gets purchased, which of course leads to an even steeper increase in the price movement. For example, it doesn't always have to be like that. So liquidity zones under your price, that indicates that you have a strong support level there, because very likely if the price drops to that limit order kicks in and it protects you against even further losses. Now that is not always true, because we have these huge market makers, the whales as we call them, who know that you look at these liquidity zones and sometimes use that to manipulate the market. Again, trading is not easy. Stop hunts, an advanced concept. I won't touch on that right now. But by the way, if you join my community through crypto.lifestyle, this is all what I will teach you. I'll spoon feed you that knowledge slowly but surely. Okay, then how deep is the order book, liquidation maps, funding rates, all very advanced topics. Really, that's why it says read the market like a pro, okay? And then execution and trade psychology, knowing about over trading and about fear of missing out, controlling that, the power of back testing and journal trades, meaning you just trade hypothetically. And actually, that's what we will do today together when we place a trade, you and I. So this is where we go into the live market example, which I will do now. So to do a live trading example, I will use a platform called Bitfunded. And I think it is an ingenious invention, Bitfunded. What is Bitfunded? Bitfunded is a platform where you purchase what is called a challenge. I think it's $50 or $70 to purchase a challenge. And then you're given $5,000, hypothetical $5,000 to trade with. So you need to pass 2 tests if you will. And once you pass those 2 tests, then you're being given real money, other people's money. So I am currently partaking in a challenge where I need to first pass 2 tests with a $5,000 account. I need to grow that account to at least $5,250. And then I need to do that again. And then once I have passed that test, those $5,000 turn into real money. Granted that I only paid $79 to even participate in this challenge. And the real money is other people's money. And as I continue trading, I get to keep, I believe, 90% of my trades. So if you don't have any money to trade with, but you do have $79, then you can use that. You can do that. Also, I like to do it to just constantly test trading strategies, because I can do that. If you fail the test, nothing lost but the $79. So type in Bitfunded if you want me to show that. Type in Bitfunded right now, because this is really a nice secret that I'm telling you here. It's a very, very powerful tool, and I think we should all use it extensively. Come on, type it in. Type it in, don't be shy. Okay. So here we have my Bitfunded platform, and you see here, this is my initial balance, $5,000. This is stage 1. So as we go to the dashboard here, you can understand a little bit better what I mean. So you have $5,000 as your balance. You have up to 5x leverage that you can use. You can trade for as long as you want. You need to trade for at least 5 days, so to show that you can actually trade in the market. And within a day, you cannot lose more than $250, and you cannot maximum day loss. And within the entire challenge, you cannot lose more than $500. Okay, and then once you have made $400, then you go into stage 2. So I'm already at $121 mark. I've been trading for 3 days. So now what we will do is we'll click proceed to trade, and then it brings you into the trading platform that it integrates with. And here you see it says demo account. So that shows you are still trading with demo money. But I want to look at a trade. Now, one trade that I like to look at is potentially on a coin called Rune. So Rune, first off, when you look at a trade, you can take 2 approaches. You can just look at the charts and the technicals and not worry about anything else, which is okay for scalping and day trading. Or when you do long swing trades, you kind of want to know what are you actually trading with, because otherwise you're investing in something and you have no idea what you're investing in. Rune is the coin of the Thor chain, and Thor chain, what it does is it helps you jump in between different blockchains very quickly and very effortlessly. Do you believe that is a need in the crypto space in the future? If the answer is yes, then you can use it as an investment or a long swing trade. If the answer is no, then only scalping and day trading. I personally think that it is very, very important, and it will become more and more important as these AI agents trade for us, that we can effortlessly, fast, and also cheaply jump in between the different blockchains. So I think the Rune project is indeed a good, we call that the project has interesting fundamentals. Because if the fundamentals are not right, then, what are you doing? You're really just trading a meme coin. A meme coin doesn't have fundamentals. A meme coin is just a means to build community, and you can say we all are in on Pepe, for example, and that makes us feel good, right? And Pepe rises and falls, and we hopefully trade it in a way where we can make money. A coin with fundamentals like Rune is actually there to raise capital for a business venture that creates value in the world. And Rune being, as I explained to you what it does. Okay, let's move back to the chart. So I know about Rune. I like it. I like the whole concept of Rune. And as you can see in this account, first of all, we're looking at a huge time frame. Okay, so I want to jump into the 4-hour time frame, and I want to jump on the last 2 days, actually, or the last few days, so that we can look at what's going on here. So I need to understand my platform. I need to understand TradingView very, very well, and this is also part of what you learn over time. So this is February 1st here. Rune started an uptrend after quite a brutal dump. Rune started an uptrend, and this trend seems to be respected for the past, using this, you can see how long, for the past 14 days, Rune has respected this trend. And now we are in a situation where if we zoom in even more, price has come down and has reacted on this trend. So what I am thinking, well, there's a good chance that it'll go back up, okay? But it could also, I need to know, when do I believe that my theory has been invalidated? Well, if the price falls down to even the lowest low, then definitely this is an invalidated trade, right? So then you use this tool, which is a long tool, and you place the red area on what you are willing to do as a maximum loss, and you pull the green area to where you think, I think the price could easily go back up to that. And then you look at the risk reward ratio. So this trade here has a risk reward of 2.16, okay? Then you look at, okay, the risk part, it consists of 30%, and the profit part consists of 65%. So now you know what you could potentially lose in this trade, which is a maximum of $1,000, which I have placed my stop loss here. But if my trade pans out, then here you see I'm setting my take profit level. We would make $2,200 on this trade as profit, and we would risk at least $1,000. And this, by the way, is with a position size of 3,400 US dollars, and I used a 2x leverage, meaning the money that is really at risk is $1,700. Okay, can you see how I used leverage here to do this trade? Now, this trade for me is a medium-term trade because I do think that there is a chance that it could reclaim these levels. Rune has had a little bit of bad management where they went into a lending business that crashed, and they basically got distracted from their primary mission. That is why this coin went down so much. And I believe it will recover. So this could be the trade of this bull cycle. If I stay in this trade, okay, if I stay in this trade, and let's zoom out again, and it goes to all-time highs or to like these highs, look, that would be an $11,000 gain. And this is entirely possible. I'm not saying that it can happen fast, but it can happen, okay? Awesome. So how do we now place that trade on the other blockchain, on the other platform here, my Bitfunded account? Are you still with me, by the way? Do you find this interesting and helpful? Let me know in the chat. So what we do now is we go and select the Rune pair, the trading pair. Rune USDT is available as a trading pair in Bitfunded. And now here you're doing exactly the same thing. Let me know if it is interesting. Come on, I'm showing you a lot of value here. And I need you guys to like, share, and subscribe. That is how you can pay me back. We're a Sunday morning and I'm sitting here giving you gold. Okay, so you use the long position tool, you place it on the current level, and then you set the red part to where you want your stop loss to be. So I said, if it goes any lower than this, then I believe my theory has been invalidated. And here your profit part, you raise to about where you believe it would be good to take your first profit or to exit the position. This gives me a risk to reward ratio of 2.07, which is not like crazy good, but it is good, you know. And now here comes an interesting part, folks. Remember how I said in this trading competition, if in one day I lose more than $250, I'm disqualified. So I now need to think, well, how can I set my stop loss so that even in the worst case scenario, I won't lose more than $200? This is where the following calculation comes in play. Let me see. And actually, I'm going to do it with $100 because I think I want to open up another trade and spread the risk. So now I need to use the calculator. And for that, I need to share my entire screen so you can see that. Share entire screen and here. Okay. By the way, if you like this video and the way I'm explaining these things, go to crypto.lifestyle, give me your information, join my mailing list. Even if you're not ready now, at least you are in the mailing list, okay? Crypto.lifestyle. Okay, so what I do now is I'm gonna look at the long position tool here, and the stop, I will basically, I can, with a stop loss set here, I can never lose more than 30.69%. So I'm going to use a calculator and I say, I'm willing to lose $100 and I have to divide that by 0.39. That's the basic math that I told you about, okay? So that then means that I can have a position size of $256. Now, these coins, of course, have a price. And if I want to know, well, how many Rune coins should I buy? What you can do is you can divide it once more by the price that you want to buy the coin at. So if we're going to buy right now, which I do think is good because it has just hit the support line, as you know. Let me show you that. So you see what I mean. So this is the trend support, the support that the trend where it hit the support. So it's actually a good time to buy when it does that. That's why it's quite opportune. So here you see the price at which I have to purchase right now, 1.338. So bringing back the calculator, you can divide it again by 1.338. So now I know I need to either buy 191 Rune or I need to buy a dollar value of 256. So I'm going to use leverage here, and I'm going to use a 2x leverage. That means I'm going to divide that by 2. So I'm going to use $128 of my own money, which is virtual money. I have $5,000 available to me, okay? But I'm only willing to risk $100 on this trade that means that my position size cannot be bigger than $256. This here is something that a lot of traders don't understand when they're newbies, and then they will like open position sizes that are way too big for their account and their risk level. Divided by 2, so 128. So what we do now is we, here on the right hand side, I want you to look at this. We place a market order, we use leverage, and we set the leverage to 2x. Okay, and then wait, did it work? 2x. Oh, come on. Use the slider maybe? No. Okay, let me reload this. Maybe it's already good. It just didn't lock it in. Okay, let's go back. Sometimes you just need to reload these things. Now it's set in 2x, okay? And then I'm going to buy $128 worth of C. The amount is in USDT, 128. Now, in Bitfunded, actually, you need to type in 128. In other trading platforms, you would need to type in 256. So you just need to know how it calculates it with the leverage applied or not. So in this case, in Bitfunded, 128 times 2, that is the position size will open. Now, here's an important part, the stop loss. You want to set that, okay? Now, if you remember, did we lose our, yeah, I think we did. So let's use it again. It's a good opportunity to show you again. So I have to use my long tool, place it here, make sure that the stop loss level is, oh no, I'm on Bitcoin here. Woo! I'm on Bitcoin. I need to go to Rune. Okay, so here it still is. Okay, so the stop loss is at 0.935. So again, I need to set my leverage again. Like, why? What's going on here? Okay. Let me reload. That is part of trading too, navigating these platforms, and then it works and then it doesn't. So just be careful. You need to know all of this. A lot of people ask me, can I trade if I don't like technology? I don't know. As you can see, you need to always deal with these things. So hopefully it works now. Can I set it to, and it just won't let me set it down. Okay, that's fine. Now, I don't know why. I mean, but one thing that I could do is divide this by 5, which is the same result, by the way. Okay, so rather than using $128 of my money, I use $51 of my money, and I still open the same position size. So 51, leverage is 5, stop loss needs to be set at 0.935. So I click this box here, and then I enter the stop loss price, 0.935. And the tool should tell me then here, this is the maximum amount of money you can lose on this trade. Now it doesn't, because all the tools work differently, but I'm gonna place this now. I'm buying long. I'm 5x leveraged. I have a $51 of my money that it's a market order, and I have set my stop loss, and I'm buying long. Okay, so what happened here? Your stop loss trigger price is lower than or equal to your estimated liquidation price. Now this is because this is because we are forced to using such high leverage, which I really don't want to. So why does it not let me change that to 2x? It just doesn't seem to work right now. And then I can't take the trade. I can't take the trade because I don't want to use 5x leverage. I want to use a 2x. Oh, wait. Yeah, it works on Bitcoin, but it doesn't seem to work on Rune. I don't know why. I don't have a trade. Maybe because I have an open order. No, that is on Ripple. And it is on 2x. So not sure what's going on here. This is the risk of doing these things live. It just won't let me adjust the leverage. Am I missing something here? What if I did it as a limit order? No, it seems to be locked into 5x on Rune. And I would understand it if I had a position open, but I haven't. Okay, so rather than forcing this trade right now, I just won't. We'll have to investigate why. But I think this on the other platform, this would work beautifully. There's no reason why it doesn't work here, but it doesn't. So let's not force it. But I think I walked through the whole process with you, and this is essentially probably for a lot of you who are seeing this is a little bit overwhelming. It's like, wow, that's a lot. And that's why I'm telling you, you can't become a trader overnight. You need to really start your journey and go at a pace that is healthy for you. I started being a saver in 2016, and I remained a saver until a little bit more than a year ago, and then I would be an investor, and only at the beginning of this year I started trading. Amazing journey, though. I wouldn't really do anything else than that right now, because I absolutely freaking love it. And I want you to all at least be involved in crypto on some level. Most of you should actually just be savers. Dollar cost averaging into Bitcoin. One more time, I'm calling you to go to crypto.lifestyle, put this address in the landing page, and then you get an email as a thank you that contains a video. And that video shows you in a rather beginner-friendly way how you start dollar cost averaging into Bitcoin, why it is a good idea, and so on and so forth. You're also part of Crypto Alliance, which is the alliance that I'm starting to build. And whether you want it or not, at some point you're going to be so excited about this space and you're going to realize, wow, I have knowledge, or I have exposure to knowledge that can change my future forever. And I'm going to live the way Shankar lives, doing fun stuff every day. Next week I'll be in the UK with a very, very interesting physician who teaches people how to heal themselves. So I'll definitely also create content around that on my socials if you are not following me yet. And then shortly thereafter, we'll fly to Cape Town, South Africa. And all of this paid for by crypto. Obviously, you guys know I've been an entrepreneur with a marketing agency headquartered in San Antonio, Texas. And Andrea still manages that agency, but we are able to basically be globetrotters and live with quite a high lifestyle, if I dare say so, because of crypto. And I want this knowledge to be available to all. Awesome. Thank you, my friends. This was Shankar Poncelet coming to you live from Amsterdam, and I'm sure I'll see you tomorrow. Bye-bye for now.